Good morning, everyone, and welcome to this morning's Forex webinar. Thank you so much for taking the time out to spend the next hour or so with us. And David and I will see if what we can find on the charts for you this morning, and look at just generally what's going on in the Forex world and the broader market as well. But before we start, as you know, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I know we have some new people with us here today, so I'm going to be very quick and say we're going to be looking at the charts. What we call a three-dimensional approach. Obviously, we have the chart itself, and what we use from a technical analysis perspective. Well, we look at the price action and we look at the volume. We have a methodology called volume price analysis. Those are the two elements of volume price analysis, but it also includes support and resistance. It includes candles, candle patterns, and it looks at time, and not just time in the sense of looking at the time frame that you are trading, but multiple time frames. And also we also use non-time based charts as well, particularly if you're looking to trade the faster charts. I said it's a 3D approach. The other two sides to volume to the approach to the Forex market, in fact it's to all our markets, as whatever you're trading. You look at the fundamental side. You look at what are the news releases that are coming up, not just today but the rest of the week. And this week is a hugely important one for the euro. And I know you're probably all going to say, well, I was going to say for the British pound and Brexit. Well, that too, but actually there is the other side to Brexit, and that is the euro. And often whenever you read the narrative surrounding Brexit, has always been the focus, if you like, has always been on the sterling side, if you like, because there is this parting of the ways. And anyway, I won't bore you with all the politics behind Brexit, the leavers and the remainers, but the media narrative in terms of the currencies, if you like, it's whenever there's anything to be said about Brexit, it's always been very negative for the British pound. Now, yesterday there was a slight difference on that one, and it's been very particularly on the euro pound, which is the pair that obviously is the most sensitive, if you like, to what is going on with Brexit. And I'll tell you a little bit more about that, and also what I feel is happening with the euro as well. And it's not just about Brexit. And then we look at the related markets, the equity markets, sometimes the commodity markets, and obviously the bond markets, for a view of sentiment. And we mean by sentiment is what kind of risk appetite is the market feeling at any given time. Is it willing to take on more risk? And that is reflected in certain markets, certain instruments, and also in the currencies. And the currency markets is the one that reacts the strongest, as it were. And to go back to what I was saying about the euro, we say about sentiment towards the narratives around a currency, depending on this is obviously a political issue with Brexit. And you have to be aware that we talk about sentiment, which tells us to do with risk, but markets are not sentimental. If they feel that the wind is changing towards a currency, towards anything, it is very, very brutal, and it will change accordingly. It will sniff that out, sometimes faster than you and I can put on a trade sometimes. So just be aware of what is going on in the background. And certainly if you understand the relationships between the markets, the relationships that exist inside the markets, that will help you to pick up these little nuances and clues, as it were. Right, so that's where we started. Everything is in the books, as you saw there. They're up on Amazon and available individually, and what we call these box sets. And in the box sets, you will also find worked examples of the VPA methodology. From there, David and I put together what we call the complete Forex trading program, which is a sort of huge expansion, if you like, not just of the methodology, but all the elements that I've been talking about that you really need to know to be able to become a successful and consistent Forex trader. And to that, recently we have added another really kind of finishing off the program is we've arranged, you can, for those of you who are on the program, wish to take the program, are thinking of taking the program, you will then have the option to join what we call our funded Forex program, where basically we provide the funds and you get to trade money that's not your money, and it's absolutely no risk to you. It's a tiered program. It starts off on what we call an evaluation phase. There are three levels that you can enter on the evaluation phase: $5,000, $10,000, and $15,000. You get through the evaluation process. That is quadruple, David.
Yeah.
That is quadrupled, so obviously, if you start on the 15,000, you get through that. The next tranche of money that you are allocated is 60,000, and you can work your way up to $2 million. And as I said, there's absolutely no risk to you because you don't actually, it's not your money, and it's proving very successful with traders who are already on the program. So if you're not on the program and you're thinking about it, this is a further option that you will be offered. There is, I have to say, at the evaluation stage, and only at the evaluation stage, there is a cost of entry, but it's a one-off cost, and after that you don't have to pay anything else. You just have to trade your way to 2 million. So that's what I've got to say. David, if you want to add anything to that?
No.
Right, okay. Let me just move that out of the way. What's actually happening today? Right, very, very quickly. Okay, I've got a couple of things. What have we got? Let's start with the news. Right, I've actually got financial juice here. This is something that we suggest that you consider using alongside your usual economic calendar. I know we always use Forex Factory. It's a great calendar. It's nice and easy to use. The Forex Factory has lots of advantages, and one of the prime advantages is basically when you come to a piece of economic news. Let's have a look at this. So there's the ZEW, which is a very important release at 10 o'clock this morning for Germany. So basically it tells you a little bit about the release, what it is. There could be some background on it if there are some articles on it. That's what I'm trying to say. Apologies, on there as well. And then also, which I really, really like as well, and David likes as well, is it brings up the a little chart here, and fundamental news, as we explain in the program, you do actually read it like a chart. It is data, it's statistics, and there are trends there, and you can see is the is in this particular release, this is about sentiment, is it improving, is it going down? And clearly we can see here, obviously we're the virus and the pandemic is still having big problems in Europe, and you can see here, and the ZEW is an important release because Germany is such a huge part of the EU. It's a powerhouse economy. So if they used to say that if what do they say about the US? That if the US is in recession or having having a problem, was it we all catch a cold? I can't remember what the what. That's right, what have you. But so the same could be said for Europe. Now, the other reason for having a parallel calendar, and as I said, I have the pro version for of this. I get everything in real time. This is the feed that goes through here. But they do a free version, and this will be slightly delayed, but the calendar will be there. And that is they highlight this release as a red, which is tier 1, which has more impact. And I must say, I would say that is really important. Whereas Forex Factory, I don't know what's happening in Forex Factory. They've kind of changed their classification, if you like, of news. Whereas previously an item of news would be given a red color, which is high impact. They've recently sort of toned it down a bit, and financial juice tends to take a slightly different approach. And I have to say, I tend to be more in more in line with what FJ seems to do, so their approach. And also you'll find that sometimes you'll find items of news there that aren't on a Forex Factory, which is not a criticism of Forex Factory. You can get a little bit overwhelmed with releases, but it's just nice to have the two in balance together. So what's happening today, as I said, this is the I think this is hugely important. Find out, as we said on the Forex Factory, we could see if we look at what is it telling us. Where are we? The ZEW. Read it like a chart. Well, sentiment is falling. That doesn't bode well for Europe, as it were. And I said at the beginning about this narrative about when we have a Brexit narrative, there's a reaction in the market. The euro tends to rise, the pound tends to fall. Yesterday was as I said, was quite an unusual day, and it's also linked to the fact this is a really, really important week for Europe, in as much that we have the ECB on Thursday. We know the economy, if the German economy isn't doing terribly well, we'll find out by 10 o'clock, certainly on a sentiment perspective, then you can bet your bottom dollar that the rest of Europe is in a pretty parlous state. We have an EU summit coming along, and what we also have is their recovery plan is also being thrown into doubt, in as much that we have two countries, Poland and Hungary, are they're going to apply a veto, because the plan, as with everything in Europe, comes with strings attached. There are conditions attached to it, and they feel, for whatever reason, for political reasons, they cannot sign up to it. And because everything is run as a collective in Europe, there has to be consensus. There are all these sort of underlying issues, if you like, in Europe at the whenever you have something like this that comes along, such as with the recovery. And they always try and, up till now, they always find a way round with it. We've always said, the obituary of the euro has been written many, many times before, and David and I have always said it, it's because it's a political currency. A way will be found around it, so that the consensus is seen to be maintained, and so it moves on. The crisis is then left behind, and things move on. So how the market is responding to this at the moment is, well, I had a quick look over at the CFTC data. And we can see here the euro is the longs are, it's not quite at the where was it, over 200,000 contracts back in the end of August. It has been going down, but it's still pretty healthy. So as of last Tuesday, the market was very sort of bullish towards the euro, as reflected in the futures market. So a bit of a kind of, not a mixed picture exactly, but a picture that possibly, are things going to change? I'm not going to say there's a huge swing against the euro at the moment, but you just have to be aware of what is going on in the background. The options market will also tell us what's happening with the British pound. Now, unfortunately, for some reason, these numbers are always very, very scrunched up on investing.com, and basically this tells us what the volatility is, the implied volatility, what the market thinks about the pound. Now, if I go to the weekly, which is easier to see, we can see it's up to about 15%. It's certainly increased from last week, as we saw here, which was down in 12, and I think the overnight is going to be around up in, from what I can tell here, around in the 20s. So obviously the market is expecting volatility around the British pound, clearly because of Brexit. If we look at obviously what's happening with the euro as well, as I said, not so much, because the narrative has been that in this Brexit situation, if you like, it's the sterling side which is likely to suffer more short term, possibly long term, but we don't know. But the implied volatility has still risen also on the euro as well. So just something to be aware of on what is going on in the background. In the terms of what is actually happening now, Have a look quickly, move this out of the way. Let's have a look. What we also did as part of the whole sort of approach to the Forex market, and Dave and I developed a whole series of indicators, not just for the Forex market, but also to support the VPA methodology. And you do get a whole package of indicators as part of the complete Forex program, but you can buy them individually. And the ones for Forex are these are two of them here. This is the currency strength indicator, as we see across here in multiple time frames, and we have here what we call the currency matrix. And what the strength indicator does, it tells us what is happening where on to an individual currency, what is being bought, what is being sold, as I said, in the different time frames. What we then did is we then paired that buying and selling to tell us which of the pairs are moving the most strongly. We call it the matrix because what we do here is you can highlight an individual currency, and this is the Canadian dollar, and it will give you the matrix for that currency. In other words, the pairs that make for the matrix for the Canadian dollar to tell us, is the flow of sentiment in the Canadian dollar, is it consistent across its pairs? And we can see here with the Canadian, it's a bit all over the place. You know, some Canadian pairs are moving quite nicely. This is the Canadian yen, as we can see here. It's moving to the top of the hourly matrix. The pound Canadian the pound is very strong against. The Canadian is very strong against the pound, which is why it is at the bottom. But the most interesting part of this indicator are these values, because as well as telling you, picking out which pairs are moving most strongly up this ladder, because it ranks also the pairs in terms of overall strength and weakness. So you take the individual currencies here, you match them up into their matrix. Here is as we're looking at the Canadian, we can see what's happening with the Canadian pairs as they move up and down, and also tells us whether the buying that we are seeing in the Canadian is consistent. Then we see where the strongest buying is against which counterpart currency. We could see it was the CAD yen, that's dropped down a bit, and also against the British pound. It then allocates some values. Now, what you really don't want to see on an hourly chart is these very low values, because it tells you that there, okay, there is movement, but there really isn't a lot of movement. These values on an hourly chart, they can go into three figures. And yesterday they were for the euro pound that moved very, very strongly. It was up at like 100 plus, as it were. That told me that there had been a very strong move in euro pound. Very low values like this give me an idea of the trading conditions that I can expect in either a pair that I'm looking to trade, or if I'm a trader that has that I focus on maybe 3 or 4 pairs. I have a little portfolio of pairs, maybe the euro dollar, let's have a look at euro dollar here. What value do we have for euro dollar? Well, I've got 3 minus 2. Well, that tells me that it has moved, but it's really not looking terribly attractive at the moment. So sometimes in trading, it's knowing when not to take a trade than when is to take a trade. Constantly trying to find a trading setup. Maybe if the trading setup just isn't there, and this is what they're not actually indicators. Let's give them another name. They're actually technical tools. They are tools to help you with your technical analysis. They are, a tool like that you would use in any other artisan or crafting, if you like. It is a technical tool. I also know that things aren't that brilliant on the hourly chart. Is because all the currencies are bunched in the center of the CSI. Yesterday they made some very nice moves. they're sort of stuck in the middle here. They're kind of, you know, they're kind of moving, and I'm thinking the only one that's moving, kind of made some kind of decent move, is the, as I said, is the Canadian dollar. So this is the hourly. It gives me a sense of what the market is doing at the moment. Obviously, you know, this is the hourly. On the faster time frames, as we can see here, there will be moves, but based on what I'm seeing here and the values I'm seeing here, they're not going to be, you know, they're not going to go very far. They're going to, you know, you might get a little move and then it'll be contained, as it were. I really need to see these values move higher. And you can, as I said, you can isolate the individual, the currency pairs, and you can either use it as a selection tool. You think, okay, well, what am I looking at the moment? The pound, is it, well, it's very flat on the hourly, but it looks like it's sort of flat, maybe possibly moving lower. Maybe I can go and look at a pound pair if that's going to be offering any. Well, there's certainly selling of the British pound. Is that going to carry on, or are we going to see perhaps a little sort of bounce higher for it? But I've got on the hourly, I've got them down here on the matrix. I've got the euro pound. Obviously, there seems to be more consistency of selling in the British pound. You can see here they're all sort of more or less together. Euro pound at the top. What are the faster time frames telling me? Well, it's turning lower on the 3. I've got the 10-minute. Well, it's a little bit. It's a mixed picture at the moment. So, but this is what these tools tell you, and that's even before you have a look at a chart. Right. Just very quickly, let's have a look at what did I see here. Yes, this is what I meant by yesterday on the euro. Now, this is the daily chart for the euro pound, and I just want you to have a look at this huge candle here. I hope you can see the wick to the candle. This was yesterday's candle. Now, this wick here, in the morning, those of you who were at your desks and perhaps were trading the British pound overnight on Sunday, as I said on Friday, I said beware, you know, there were all sort of Brexit talks going on at the weekend. In fact, there was a gap down on the British pound, and that was sort of, there was a really nice move to the downside for the British pound, reflected in the euro pound. Obviously went the other way. You can see this is almost 100 pips here, but then by the afternoon the sort of tone, the mood kind of changed, and it sold off, as you can see here, very, very sharply. As I said, the euro, it has Brexit, but it has all these other issues behind it. And, you know, we will find out later on this morning when the ZEW comes along, and also there's the EU summit. So there's a lot going on with the euro if you are a euro trader. Let's take that down. Where are we? Let's go and have a look at what's you, because as euro pound is at the top at the moment. Are you looking at the euro or pound, David, or are you looking at something? Okay, fine. I'll leave you to do that. Where are we? Well, it certainly sort of perked up a little bit this morning. This is the daily. I have 5 time frames here. I've got the daily, I've got the hourly, I've got the 10-minute, I've got the 3-minute, and I have a Renko chart here to help with entries and exits, and also staying in a trade. Now, these 2 charts are important in as much that these are my levels. The third element, the third pillar of volume price analysis, is support and resistance. How you measure your support and resistance, if you have our indicators, you will have proprietary, I say, technical tools for that. You will have price-based ones, you will have volume-based ones, but we've also added another tool, and that is the Camarilla Indicator, which gives a kind of hierarchy to them. It tells us which are slightly more important than others, and it works in 2 different ways. The time frames up to but not including the hourly are refreshed every day. So here we have our levels that are in play for today. The R3, the R4, I would say the R3 and the R4 are probably 2 of the most important ones. at the R3, you will often get a major reversal. We've seen here it failed 1, 2, 3. It's had 5 attempts to go through the R3. Will it reverse again? We will have to see. There's a lot of volume that's come in under this candle here. We've actually had a volatility candle triggered as well. There was a volatility candle triggered before that. So if you are trading and the price comes up to the level such as the R3, then what can you expect? Well, you can certainly expect a test. You can certainly expect some congestion. We had a test there here as well, and a reversal. So you know what to expect. This is what a level has to tell you. These significant levels, and also Fibonacci levels as well, they should give you some more information, in the sense that, what can I expect when price gets to this level? Is it perhaps going to congest? Is it perhaps going to reverse? That's why people use them as targets. They use them to lean against. They use them, some traders will use Fibonacci level. They will get to a certain level and they will automatically say, right, it's going to reverse. We don't use that approach. We say, well, it's a significant level. We then look at the price action. More importantly, we look at the volume, because at the end of the day, volume is what is either going to is going to push that higher, go through that level, because that is a very tough level given the number of times that it's been tested. And you also wait to say, well, is it a reversal? It doesn't go through. Do you possibly take, the opportunity for a short? And it will certainly also be highlighted on our CSI, on the currency strength indicator. You use these tools in combination to give you a confluence of signals. Let me just move this to a faster time frame. Here we are. And let me take off all the currencies that don't apply. Let's just apply them to the pair in question. There we are. What are we looking at the moment? Here we are. Let me take that down a bit so we can see. What are we seeing? Here we are. This is the 15-minute. I'll just pop that over there. Let's have a look. In fact, let's put a slightly faster time frame on. Let's put a 5-minute one on. And that's the other way to use multiple time frames, is always look at a faster time frame to, sorry? There we are, there we are. Oh, have I got the, there we are. Right, so faster time frame, here we are. What am I looking at the moment? Well, this tells me, this is really interesting, because on the faster time frame, what have I got? Let's take 5 minutes. What am I looking at? Is I'm actually looking at the moment. I've still got the pound going down, so obviously pound is being sold at the moment. But these two lines were actually sort of going in the same direction, and when they're going in the same direction, it tells me I'm in congestion. So if you like, the currency strength indicator, well, currency is confirming what I'm actually seeing on the time chart of this 10-minute time chart. And I know, I'm facing a potential congestion because I'm at the R3. This is an important level. The next important level is the R4. The Camarilla protocol, generally you will only see 4 levels out there. We've actually put 6 levels in. We've just the algorithm is slightly different, but I know that if it gets through the R3 with good volume, where is it heading for? Well, my target is the R4, and these levels also help with stock placements and also with price objectives. It's not a risk ratio approach, it's just an objective. It's where it's likely to be going. All things being equal, with the volume supporting the price move. Now, I can see that the euro is trying to turn up here, so possibly that gives me some encouragement that I'm at the R3, and if the pound still carries on lower, we shall see what happens with that. I've got the, just take this out of the way, 1 second. Let's move that over to my other screen. You can do that with MT5. You have a feature called docking, which allows you to move the charts out of your profile onto another screen. Unfortunately, you can't do that with MT4, which is a real pain. Looking at the Renko version of this price move at the moment, You can see this is the move higher that we've had, you know, a few pullbacks here and there. This is the resistance that it's hitting at the moment. It's a little bit sluggish, but generally speaking, on, you know, what is this pair doing? Well, it's certainly in this uptrend, as we see here. This is the daily candle. This is the little wick that we see at the bottom where it's had this little pullback. So what is the euro pound looking to do? Well, it's still, you know, potentially looking to move higher, but it has to get through the R3 on this time, on the time frames up to, but not including the hourly. Now, if we go to the hourly chart, you can see the levels are all at different places. And that's because these levels are here for the rest of the week. So you get two different sets of values for the cap. In fact, you get three sets of values, because the weekly chart will tell you what the values are for the rest of the month. So when you know, multiple time frames, you look at the levels across those time frames, and when the price approaches a key, you know, if there's a confluence or it approaches an important level on the hourly chart, as we can see here, this is on the R3. It's tried to break through. It's been congesting along the R3 on the hour. That gives that level even more, it gives it more validity, if you like, and we really have to pay more attention to it. And interestingly, if we look at the hourly chart for CSI for these two currencies, move higher like this, what do we see? Well, they're moving together. They're sort of intertwining. They're moving together, and that's really, really tedious, because it's just, you know, stuck in congestion, and we have to be patient. And we look at what's happening on financial juice, just to make sure, as I said, you really have to just keep a close eye on the news headlines or for the next couple of days to do with Brexit, and you will see constantly coming out. Here we are, was it? We want to reach a deal, but not at any price. Yeah, fine. Yeah. I mean, you know, at the moment, if you like, in any negotiation, when you're coming to, you know, a deadline, as it were, it's all about saving face, and it's all about who's going to be perceived to have come out with you know, a deal, a better deal, and certainly nobody wants to be accused of collapsing the whole thing, and it will all be reflected in the currency markets. Right, that's what I've got to say about the euro. Apologies, I've been going on a little bit longer than I anticipated. I will just pass you over to David. Have you got euro yen there? And hopefully he will have had a little bit better, more price movement in the pairs that he's been looking at. If you've got any questions, just pop them into the chat box and we will answer them for you.
Always helps if I turn my microphone on. Hopefully you can hear me. Hopefully you can see my screen. I've just got the multiple currency strength indicators up just to give you a flavour of where we are up to the 15-minute. I've been, as Anna said, I've been focusing on the euro really because, well, lots of different reasons, but not least of all because it was very overbought coming into the London Open. Right up at the top here, as you can see, and on this occasion, it would have picked up a nice trade immediately. It doesn't always happen like that. But certainly when you're coming into a session crossover, this is 8 o'clock UK time. So this is when London Open, you know, in the precursor to that, you're always looking for the opportunity for reversals, whatever the currency may be. The dollar did a very similar thing. I'll pull that over, and in fact, pull that over now, just so you can see that. This is on Trading View. There we go. This is 1 minute, 2 minute, 5 minute, and 15 minute. And again, you can see what happens at 8 o'clock. You know, there was a general sort of slide lower, and then snap, off we go, and you know, it rockets up. Here we are. This is on the 5 minute. You can see it here. No volume on here, but nevertheless, you can interpret through just simply looking at the price action. Got a nice recovery here on this candle, a hammer candle, if you will, and off up we go. Similar sort of thing here. We had a bit of weakness here. Then we had some buying coming in, if you like, and then off we go up to the upside. And obviously, you've got the trend monitor on here, giving you helpful guidance as to the sentiment and trend. Let's move that back out of the way. So that's what's going on at the dollar now, coming off a little bit. but it has been fairly strong for the last 15, 20, 25 minutes or so. In terms of the euro, lots of euro selling. I've got the euro yen, I think, up on one chart, and I've got euro Aussie on another. And again, it doesn't take a great deal of thought to anticipate why, purely because we've got strong selling in the euro. We've got strong buying in the yen at the moment. This magenta line is rising quite strongly. And for a euro Aussie, we've got the Aussie, which was very oversold, right down at the bottom here on 5 minute, starting to rally quite nicely. Now that's rolling over into 10, starting to see that uptick in 15 as well. So, you know, decent opportunities there. So let's go over to this one, which I think is euro Aussie. Yeah, that's the euro Aussie. And you can see that reflected there. If it go up onto the 5 minute, perhaps, there we are. And one of the patterns always looking for is the 2-bar reversal, where you get these very similar arrangements of candles. So on a 10-minute chart, this would be a move to the downside followed by a move to the upside. In other words, a candle like that with a very small body and a deep lower wick. Equally, you've got a reversal here. You've got a move to the upside followed immediately by a move to the downside. If you overlay one on the other, what have you got? Very narrow body, big wick to the upper body. Exactly the same thing here, more dramatic, bigger wick to the upper body, but again, narrow body here, and down we go. So what you're looking at constantly, you're constantly looking for those sorts of patterns on the time frame. The trend monitor was very supportive of this move. This was early doors, right the way up into, this is 8 o'clock London time. This is when we get the uptick in volume, so we get a big increase in volume. It's what we expect to see. So in terms of volume analysis, at the moment, we are restricted in terms of looking at what's going on in this range here. In other words, from 8 to around about 8:30. Whereas this session here, we can compare. This was 7 through to 8 o'clock. So this was European time. Then we're restricted to comparing volume over on this period here. Where is this particular pair moving to? Well, the first major stopping point, in fact, you've got a low volume node here on the VPOC, which is great. That should move through there fairly quickly. But then once it's through that, then the price action is going to run into some pretty heavy weather. We've got obviously a lot of volume building rapidly through here as we get down onto the volume point of control. So that in itself is going to present a barrier. We've also got a potential support platform here on the accumulation distribution. In fact, we've got a cluster of 2. You might not be able to see there's a little blue one knocked back there. So there's a little cluster of 2 acting as potential support just below the price action at the moment. But if it breaks through there, then it's got to fight its way through all this heavy weather volume down here. And then when we get down to the volume point of control at this level down here, that is where you can almost be guaranteed to see, at the very least, some sort of congestion develop. So in terms of jumping in this trade, it's quite limited in what it is likely to deliver from now on, because you've only got maybe 10 pips here before you're likely to see some pretty severe congestion develop. So the question you're always asking yourself is, when you're getting into a position, is literally that. What is on the chart? This is not about the risk and reward aspects of, oh, well, I need a 3-to-1 or a 2-to-1 or a 4-to-1, whatever it may be. The market doesn't care about what you need or want. The chart will deliver that from a chart-based perspective, and it's purely a question of looking at the chart and deciding for yourself, is this a risk I'm prepared to take? What is the opportunity? Where is the price action likely to struggle? Does it deliver enough for me considering how much risk I'm putting on the table or not? And it's as simple as that. So in terms of jumping into this opportunity now, I'd say it's very limited, certainly on this sort of time horizon at any rate. And that's just looking at it from one chart, one time frame perspective. We can go and look at others. This is on the 3 minute. On the 3 minute, we're actually breaking away from the volume point of control here, but we've got a very strong level here, which is literally just being tested. It may hold, it may not. If it holds, then it's obviously it becomes a stronger level of support. The thicker the line, these are presented automatically by the indicator on NinjaTrader. In other words, it creates this visual picture of strength and weakness up and down the chart. So these minor levels up here, you've got a little 1 here. That means it's been tested once, so it's pretty weak. Again, same here. This one's been tested 3 times, so that's much stronger. This has been tested 9 times, so it's stronger still, and hence the reason it's thicker. The trend monitor is resolutely red at the moment, so it's still telling us that the sentiment at the moment is remaining bearish for the time being. If this does break the downside on the 3-minute, then from that perspective, it's more positive because the volume here is obviously falling away rapidly. We've got a low volume node here and much reduced volume further down the chart. But you've got to battle through this level, you've got another level here. So again, it's a question of putting that all together. We're looking at the volume, we've got rising volume under that last candle, that's fine. Sorry, this one, beg your pardon. Volume and price in agreement there, nothing particularly to suggest that there's any strong buying coming in there. You've got a tiny little wick top and bottom, so that's absolutely fine. So price and volume in agreement there, and it's just hovering around that level. Just keeping an eye on what's going on in terms of the dollar right now. And you then go up to a much slower chart, and as I always say, the aspect of time is so important because time on a slower chart, any aspect of the technical picture on a slower chart will always trump a faster chart purely because it has more validity, it has more weight to it through the prism of time. So the fact that you've got the price action now bearing down against the volume point of control on a 30-minute time frame is significant. It's also significant by the fact that you've got a very strong potential platform support that literally was tested just that moment ago. Here below it, this red dashed line. So if you're looking at this now, from all aspects really, from the fastest to the slowest, it's not a great opportunity for all those particular reasons, just looking at it through the prism of time. What you're also looking at here, this is on the 5-minute. You can start to see the euro here is starting to bottom out a little bit. It's starting to kick higher. So perhaps we're starting to see a little bit of buying coming into that particular opportunity. Let's just go over onto, and I've got the euro yen, which I had earlier on the Renko charts. There we go. That was the move in the Renko, and I've got these set to the equivalent time below. This is on 15 seconds, this is on 30 seconds. This is on 1 minute. It's an immensely powerful way of trading because it gives you the blend of both time where you can analyze volume and price, but it also gives you that momentum aspect to the chart where you're looking at it through the prism of a non-time based chart above. Now I've got these matched up. This is on 30. I'm just going to check these again. This is on 15 seconds. I'll just click that on, wait for it to load up. So it's starting to speed up a little bit. We've now got that on 10. And if you convert that to pips, basically that's not 10 pips, it's basically 1 pip. So each of these bricks is 1 pip. If I go up and do the same thing on the 30 second, see what value that comes up with. It'll be a higher value. That is on 1.6. So that's a pip and a half, more or less. And then we go up to the 1 minute. Click on that. Wait for that to settle, and that's come up at 2.2, so that's 2.2 pips basically. So what we're seeing is the start of this move. Now, in terms of what is going on at the moment, is it the best opportunity? And the short answer right now is probably not. Why? Because that euro buying is also reflected in a kick up in the yen at the moment. Now, if the yen continues on lower, fine, this will continue. But at the moment, what we're seeing now, as Anna said when she was looking at her charts, where you have the two lines traveling together, then the strength in that particular trend is not going to be as dramatic as you would see if the two are crossing. So if this were euro dollar, for example, I'm just looking over on the right hand side, the dollar is selling off nicely. You can see it here. I'll just pull it across again. And we'll hop over onto the majors matrix, but that's what we're seeing right now. So we're seeing some decent selling in the dollar across the time frames. Take that out of the way. Nevertheless, we are seeing this move, but it's not going to be as strong purely because the yen here is kicking up with the euro. Nevertheless, there's money to be made there. What we're seeing is the trend monitor transitioned. We've got the trend dots on here. It's a fantastic blend of two indicators. These are very close to price action, and therefore what you're looking at here is very close trend changes, if you will, where the trend dots move from the bottom into the midst of the candle and then to the top again, in other words, pressing down. Then they rotate back out to the underside again. Now they're starting to push up again. They're starting to push, push, push. They've changed color as well. But what you see on the trend monitor is nothing. There's no change through this transitional phase here. It just sits and maintains its color. Equally on the 1.6, the 1.6 pip brick size, exactly the same. And over onto the 2.2, we're now starting to see that change in sentiment that's rippling through across the time horizons. And you've got exactly the same principles down here. I haven't got the trend dots on here. We've got exactly the same principles in terms of trend monitor. It's transitioned to blue, it's transitioned to blue, it's blue over here. So it's giving you all those signals, that blend of time with non-time-based charts, which is helping to keep you in through the inevitable pullbacks, these pauses and pullbacks which you get in all time frames, which are so damaging because the emotional response is, I've got some profit, I've maybe got in here, whatever this may be. This is only a handful of pips, obviously. I've got in here, it reverses, I get out, and then I live to regret that decision because the market continues on higher. And that's what these, as Anna said, these technical tools have been designed for lots of reasons, and the trend monitor and the trend dots have been designed to help to keep you in, because that is the hardest aspect of trading, bar none. It's not about getting in, it's not about getting out, it's about staying in. Because if you can stay in when the market pauses and pulls back, then that is where you make the money. It's not in the getting in, it's about staying in. And that's part of the reason where you have to settle yourself into whatever tactical approach you're going to take to trading. Are you comfortable trading reversals? Are you comfortable putting more money, more risk on the table for that greater return? Because you have to be patient, you have to wait. It has lots of negative connotations, but the positive one is that you get into the trend early and therefore you benefit accordingly. If you've got it down here with the euro, you're now, you're making money pretty rapidly. And that's what you have to settle in your mind. You have to find out what suits you. We get lots of emails about it. It's the one thing that we always suggest that you start with in the educational program, is start with the psychology, because it teaches you about yourself. And if you understand yourself, your strengths, your weaknesses, you focus on your strengths, you're aware of your weaknesses, you manage your weaknesses, but you develop your tactical approach according to whatever your strengths are and within the limitations of your weaknesses. And that is the way to succeed, and it will help enormously in choosing those tactical approaches which suit you. It may be dictated by the amount of time you have available. You may not have the opportunity to sit in front of a screen all day. Therefore, scalping trading is not something that would be available purely because you have a full-time job or for whatever reason, other commitments. But all things being equal, if you have the opportunities available, you've got to decide what they are and what suits your personality. Just keeping an eye on what's going on in terms of the dollar. So that's ticking up nicely. Let's just go back onto let's go to the majors matrix. Let's have a look at the futures. Same thing, there we go. So this is what we're seeing in terms of that dollar selling. We've got moves pretty much across the piece. This is the Aussie dollar 6A, 6B is cable, 6C is CAD dollar, it's not dollar CAD, so it's the inverse because these are the futures markets. We've got the euro dollar down here, we've got the yen dollar here, and we've got the New Zealand dollar over on the right-hand side. So these are all pointing in the same direction in terms of dollar strength and weakness. And you can see what's going on here in terms of which pairs are likely to be moving. And again, it's a classic example. This is cable, and it's just sitting on the volume point of control. Why is it sitting there and not moving? Because the pound is moving down and the dollar is moving down. So in terms of pound dollar, it's pretty much congestion because they're both moving in the same direction. So there's no great opportunity of a trend there. And it's the only one really that you could say, is moving. Well, there's a couple, I guess, moving in opposition. But generally speaking, what we've got at the moment, we've got the Aussie dollar, which is rising nicely. the dollar falling. So that is why you've got this decent trend has developed on that particular time frame. When you look at the others, you look at the CAD here, that's moving with the dollar. You've got the euro that's moving with the dollar. You've got the pound moving with the dollar, and then really you're left with the Japanese yen here. But again, the Japanese yen does not necessarily move in the same orbit as the other yen pairs. We explained in great detail because it is a unique currency pair and very tricky to trade. If you're a novice trader, don't suggest you start with the dollar yen. It takes some getting used to, I can tell you. This is the Swiss franc, so there is some movement in terms of the Swiss franc. I haven't got that on the chart here, but certainly in terms of Swiss, buying of the franc, selling of the dollar. Let's just go on to the spot market, which is that one. There we go. Similar sort of thing reflected there, obviously as you would expect, and it's a question of just picking off the trades. The New Zealand dollar is moving pretty strongly because we've got strong buying in, just pull that over a little bit, there we are. Got some decent strong buying in the New Zealand, equally selling of the dollar, so that is moving quite nicely there on 5. Gone through this, what was a potential resistance area. It's blasted through that. It's now moving up to this low volume region up at the top of the chart here, so it should move through there fairly rapidly if it gets there. But equally, we're aware that we've got a top here where the market reversed off that previously. So you'd be bringing that into your analysis, just looking at what's going on elsewhere. When the markets are like this, it literally is just a question of picking up what's available, trying to tease it out, pick it off the chart. And it also depends whether you are focused on a particular group of pairs or whether you are completely indiscriminate and happy to take on whatever the market is offering. And again, that's part and parcel. I know a lot of our students, they have reduced it down to a group of pairs that they trade. Some they're more comfortable with, others less comfortable, so they just focus on a group. It's perfectly fine. It's again, it comes back to what suits you, what you find works for you. We basically, in volume price analysis, the methodology, in terms of the technical tools and everything else, we lay it all out there for you. It's what you do with it thereafter. And it's tailoring it to your own particular strengths and weaknesses. And that's really what it's all about. And also bringing in other aspects. We get a lot of emails. You'll see them on the Amazon comments as well on the books. Traders take the VPA methodology. They take part of that and they'll bolt it onto Elliott Wave, or there was a nice comment on the VPA book the other day from someone who said, I've been a Fibonacci advocate for donkey's years and I never appreciated and I've found volume and I feel, I've just, it's made it so much better. It was the missing component, and it's just a nice comment, and we see those all the time, and Anna gets emails about them all the time as well. Just seeing what's going on here. It's all pretty. You just got to dig around, and if you go back to, let's go back to the multiple CSIs again. It is desultory at the moment. It's tricky, and it's a question of trying to, when I always say it in terms of the US session, particularly when you've got the indices. Let's just see what's going on in terms of sentiment on the indices. Get a fix on that. Okay. This is on the 3 indices on the YM, the NQ, and the ES, just on the US on Globex. Reload that. Just on Globex, just get a feel for sentiment, and you can see it's all, this is a razor blade of price action. The same here, the same here. It's very desultory in terms of sentiment. There's no particularly strong sentiment driving the markets right now. Tepid is the word. So, that's where we are at the moment. There we are. Right. Yeah, this is Euro Aussie. But again, let's switch this over to Euro Dollar. Switch that over there. Okay, so we've got a half decent move on euro dollar, buying of euro, selling of the dollar. Dollar selling is still going on. Put it over here again. You can see it on the multiple time frames. There we go. That's what's going on. So there is strong selling of the dollar, and that's a question of matching it up to the pair that is going to deliver that. At the moment, it's let's go down onto the 15-second chart. Just for a change of pace, we're breaking away. We've got a ton of volume coming there under that particular candle, and nothing following it, which is a little worrying. To see if that breaks. Let's just move that over there. Let's go down to the 1 minute. That's okay. That's all right. It's not too bad. Fine. Nice widespread candle. Decent volume under that particular candle. That's okay. Moving up into a low volume area. Fine. Trend monitor's blue across the piece. Okay. Don't like the look of that particularly, but that may just be a pause point on the faster time frame, very fast time frame, 15-second. So it may or may not develop into something else. The rest of them look okay. Got 1 to 3. Broken through that. We're breaking away from the volume point of control. We've got through this, what was resistance. It was capping everything at this level. So we've got through that. So that's now a nice platform of support. Got a little way to go. The volume, as you can see, is falling away on the VPOT, which is fine. Just reload that. There we go. Starting to transition through into bullish sentiment. A little bit of a top here to get through, but again, moving through into low volume. So, that's all okay for the time being. Rising nicely there. That's fine. The dollar over on the right-hand side is still falling. It's now down at 90.84. So that's okay. Moving in the right direction. Massive volatility on the 30-minute. You can see it here. This was a huge volatility candle. You may not be able to see it, but I can assure you it's there. The volatility trigger here. Lots of volume coming in. So again, it's constantly up and down the time frames to highlight or put together all the pieces of the jigsaw puzzle. Moving up nicely, rising strongly. Equally, you could be on euro yen right now because the yen is falling strongly as well. So either of these would do. Dollar and yen falling together. Euro rising nicely, going up nicely now. Dollar's falling strongly. We're down to 90.80 over on the right-hand side. So that's quite nice. Nice and comfortable. Nothing particularly scary right now. The thing I think I will be watching for now over here is obviously for the trigger of a potential volatility candle to form here. And remember, the volatility indicator, it triggers as soon as the metric of average true range is met. So you don't have to wait for the candle to close. And it's just the beauty of the indicator. It works in all the time frames. So if that triggers in real time before the candle's closed, that's the one I'd be keeping my eye on right now. Because if that triggers off on the slower time frame, then I'd be looking for potentially closing out on the probability of a reversal, or at least congestion at the very least. That's fine. Volume, price, and agreement there, all good, nice and dandy. Nice move. Trend monitor keeping in, not a flicker of a change down here, just gone straight through it. That's the power of the indicator. That's what it's designed for. That's what it will do for you. Will keep you in, because if you can stay in through these moves and not get bounced out all the time, you will make bigger winners, and it will offset the greater number of smaller losers, because that's the dynamic of trading. You have a lot of small losses, but you have fewer larger winners, but they will be much bigger winners, and they will offset. If you've got the inverse of that, then it tells you a lot about the emotional issues you have in getting out of trades when you're in a profitable position. It's hard. Trading's hard. It's not, it's not simple. It's a hard business to be in, and you have to find ways of coping with the pullbacks that come all the time. You've got one here, and VPA is a hugely powerful methodology in helping you to stay in, because what it delivers for you is a view of whether what you're seeing is a primary reversal to a primary reversal in the opposite direction. In other words, if you call this a primary higher, are we seeing a primary lower develop, or are we simply seeing a little pullback and then a re-establishment of the primary trend once more? Seeing a bit of a pause point at the moment. You can see the volume's fallen away on this particular time frame. This is starting to develop into a, let's just pull that up there. There we go. Let's get those all, there we go. Looks a little bit better. Where are we at the moment? We've still got, let's go back to the multiple CSIs. We've got, this is on 5. Let's go and see what's happening on the very fast time frames. Sorry, wrong one. On the currency strength. Where are we? There we are. Okay, let's drop that out of the way. Okay, and this is what we're seeing at the moment. The euro is, oh, sorry, there we are. The euro is now up into overbought on 1. The yen and the dollar are now down in oversold on 1. We've got some way to go on 5. We've got a long way to go on 10, and plenty of travel left on 15. And this is what it comes down to, because what you're potentially going to be seeing now is, this rolls all the way over down here, maybe then comes back up again. But what that will be reflected as across these time horizons, on the 5-minute, that may just be a kink. On the 10-minute, it may just be a flattening, and on the 15-minute, it may just be a slight pause developing, something like that. But what you're actually seeing over here is the pullback reversal reflected in terms of the individual currencies on the CSI. But if that is going to be a full-blown reversal from a primary trend higher to a primary trend lower, then ultimately it will go right the way through the various time frames. And this rollover will be reflected here, and the rollover will get up to here and roll over, may not even get to the top of the chart here and roll over. And that's, again, it's using all the information that you have, the technical information here, seeing what is going on visually in terms of the currencies themselves, and applying that to the chart. I'm just looking over on the right-hand side. The dollar is starting to kick up a bit. It's now gone back up to 90.80, where it was down just below that. Now starting to move a little bit higher. So you're starting to see that reflected here with the dollar buying coming in, but this is 1 minute. So you've always got to apply that in, and this is what it comes down to. It depends the time frame that you're trying to trade in, your overall approach to the market. What is it you are trying to do in terms of your time horizon? Are you down here on the 15-second? In which case you're now probably trading short. Are you over here on the 5-minute? Are you over on the 30-minute? In which case you don't really care what's going on in terms of 15-second. And it's that constant appraisal of your time window. It's like the analogy I've used many times is of a blinkered horse. Horses are blinkered on the flat because they get distracted by other horses around them, and therefore their only focus is the winning line. And it's pretty much the same here. You blink yourself, you have 3 or 4 charts up in your time horizon. You don't go flopping down onto the much slower ones for confirmation bias that you were actually right originally, and at the moment, well, it's not quite right at the moment, but I'm sure it'll come right in the fullness of time if I go down to a slower time frame. You have to be disciplined and stick to what it is you're trying to do it, stay in it, and if it doesn't work out, get out, go on to the next one. Simple as that. Yep. Right, I'm just going to wrap up because we've gone way over time. Sorry about that. Are there any questions there? Let's have a look. Does the calendar on a comprehensive listing of important events? Yeah, it is. Yeah, on Ecofin, absolutely, in the VPA room. And when will the market hours show the correct information? I don't know, Tony. I'll check that again with them. I will certainly chase that up for you. This is where you'll find all the bits and pieces. This is the education program. As Anna said, it is now, it's a fully rounded education program. I'm not to say it wasn't before, it was the complete Forex trading program, but what we've now bolted onto that is the opportunity for you as a student of the program to actually leverage that knowledge at no risk to you. The money you're using, it's our money, it's not your money, it's our money, and therefore there is no risk. Yes, there are rules. You can read all about it. You can certainly find it on if you're a student of the program, you will find a tab where it's all explained in great detail. You've also got the opportunity to download the PDF, which has all the terms and conditions. But if you're not on the program, you want to find out more, just click this button here and that'll take you to the page, which explains it all. You start with the evaluation at $5,000, $10,000 or $15,000. Once you've passed that level, we then multiply it by 4 up to, so if you're on 15, you then get a $60,000 account, and thereafter we double it all the time. So you go from 60,000 to 120,000 to 240, 480, and on up 960, and on up to 2 million. The good news is you also get a kickback. We give you on in terms of profit return, it's 35% in terms of the initial evaluation. Thereafter, that rises to 40%. So not only are you learning to trade a large funded account, which is a very good thing for you personally, because it will help you to develop the all-important parameters and skills that we've wrapped around it. But it will also give you the opportunity to earn, obviously, so you get that kickback to you at 40% for whatever profits you're making, and that's paid on a monthly basis. The initial evaluation one is paid as a lump sum at the end of the evaluation process. But it's there, it's low risk, there's no risk to you. There is a one-off cost to join the program. It's very low, and we hope that you will take advantage of it because it's unique. And it will just give you that opportunity, as I say, to trade a large money account. What we're looking for is consistency, because, and so are you, because if you can be consistent with a small account, a relatively small account of $5,000, $10,000 or $15,000, you can be consistent with a $2 million account and all of that. The pathways are there. If you just want to trade your own money, you know, a large account, or perhaps you want to trade someone else's money, or perhaps you want to get a job in the industry, it's there. It's whatever you want to do with that knowledge and skill. In terms of the technical tools, you'll find them over here at quantumtrading.com. MT45, NinjaTrader 7.8, and TradingView. TradeStation, we think we will be launching this month, so keep an eye out for that. That'll be both 9.5, which is the interactive brokers relationship, and also version 10, which is TradeStation securities. We will be doing almost exclusively stocks on TradeStation securities, and currency futures very much on the TradeStation 9.5. Once we've done that, we're going to drop onto TradingView and port over all the other indicators that are not there at the moment. That's the matrix, the array, and the heat map, and one or two others, VPUC, and I think the support and resistance. So that will be a complete package of indicators once it's done and dusted. Finally, you can find all our, and by the way, when you do, you can buy one indicator, but when you invest in the full package, you also get all future indicators we develop free of charge. They're just added into your account thereafter. Finally, you can find all Anna's analysis over here, annacooling.com. All the books there are up on Amazon in both Kindle and paperback format. That's it. Hope you've enjoyed today. We will see you later on this afternoon. You're more than welcome to join us then. That's 3 o'clock UK time for the US session. If not, enjoy the rest of the trading day and the trading week. Stay safe, stay well. We will be back next week for the last of this particular series before Christmas. We will then be taking a break for a while, and then we will create a new series in 2021. But we are here next week at the same time. So thanks for coming along. Hope you enjoyed it. See you soon, and bye for now.